Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, the Bank of England signals summer rate cut as it does hold interest rates at that 5.25 percentage point rate, as well as that Vladimir Putin now renews nuclear threats against the West. And we've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with the Bank of England. Now, the Bank of England has now signalled to investors that if inflation stays low during the summer, the MPC may be willing to cut rates from their 16-year high at 5.25%. This came in the Bank of England governor's speech, where he told all in a press conference that a rate cut in the next meeting in June was not ruled out and not guaranteed. Now, of course, this is some very interesting news on a topic that we always cover, which is, of course, interest rates, whether that be to do with the Bank of England, the Bank of Japan, the ECB, or the Federal Reserve, as those are kind of those leading Western central banks that we always look to when we're looking at, exchange rates and that kind of thing, and just looking at the global macroeconomic environment. And, we've kind of seen this competition really form as we've now started to emerge out of this period of high inflation, where we have started to see banks like the Bank of England, ECB, and Federal Reserve have kind of been competing with one another, it seems like, to see who could lower interest rates first, or at least I think investors have kind of created that competition through the way that they've been pricing in those rate cuts. And, we've really seen it range from who is likely to cut interest rates first, with, of course, the Fed being one of those central banks which many expected to cut interest rates first. If we were thinking back to the end of last year, start of this year, when, the Fed was expecting to cut interest rates 3 times, at that 0.25 percentage point rate, and investors were expecting 6 to 7 of those kind of cuts. Even with the ECB, at the start of the year, we were expecting rate cuts maybe even as early as March. And really, the Bank of England has kind of been that central bank which investors have really pushed back the date that rate cuts will begin very far, with investors kind of expecting rate cuts be coming in as late as August. And that was kind of around the start of this year, when most investors were also expecting the Fed to cut interest rates in April and March and May, which of course we now know is certainly not the case for the Fed. So ultimately, the kind of expectations have been very different to the reality, and this has all been as a result of changing economic data within these nations. We know, of course, for example, with the Fed and the US, that ending off last year, starting this year, that inflation rate was just dropping dramatically and much faster than forecast, which is why investors started to price in earlier rate cuts than previously expected. Yet, as we know now, there's still a great deal of underlying price pressures within the US economy, which is forcing the Fed to basically keep rates where they are, and has even led certain individuals within the Fed and outside the Fed to kind of look to increase interest rates further, which of course is a big surprise to those that were expecting early rate cuts from the Fed. So certainly, it's ranged between these kind of central banks, and many have thought certain central banks are going to cut it before others, and it really is a surprise now to start to see that the Bank of England may be the first central bank out of those key 3 that would cut interest rates first. If we're talking about a June rate cut, that could definitely come before the ECB, should some new inflation data come out or jobs data come out, which pushes the ECB rate cut further back, or even we might see the Bank of England and ECB cut interest rates within the same month, which could definitely be something that we could now expect, as of course the Fed is now being expected to cut interest rates as late as August or even September, with many expecting only one one 0.25 percentage point rate cut this year in comparison to the 6 to 7 rate cuts expected at the start of the year. So definitely things have changed, and what we're starting to see here with the UK and the Bank of England, which is why we're now expecting a rate cut, is ultimately because Andrew Bailey, the Bank of England governor, is now starting to see certain news which is highlighting that those underlying price pressures which have kept inflation high within the UK is starting to fade, starting to go, and therefore when that does pass, maybe in a month or two, that's when we can then start to see the real UK inflation rate, which should then drop down to those levels near that 2% target figure, as that is kind of that blanket target figure applied by or looked at by these key central banks in the West, where they do pit themselves against their current inflation rate. So certainly that's the key figure which we're looking at the Bank of England getting down to before a rate cut is made. But ultimately, the way certain rhetoric is being made, or the way rhetoric is at the moment, does make it seem like rate cuts are coming. With other economists also forecasting that the Bank of England is now getting close to its first rate cut, despite their rhetoric remaining hesitant of rate cuts. In yesterday's interest rate decision, the Monetary Policy Committee voted 7-2 to keep rates where they are, with 2 of those MPC members voting for an immediate rate cut. This proved economists' forecasts wrong, who had expected only one vote for a rate cut in this meeting, with Andrew Bailey striking a more optimistic tone in yesterday's speech, where he noted that there was encouraging news on inflation, which hinted towards inflation falling to that 2% Bank of England target within the next couple of months. The reasoning for such beliefs was based on the idea that underlying inflationary pressures now are looking to fade slightly faster than what had previously been expected. The key to whether any future rate cuts would be made, however, will be based on forthcoming data releases such as inflation, jobs figures, and others, which are set to be released before the next interest rate decision and Monetary Policy Committee meeting on June the 20th. Such a decision to cut rates before other leading central banks would offer a political win to Rishi Sunak as well, who is hoping to claim an economic win in the lead up to this autumn's general election, of course. So, a very interesting article there on a topic that we're always covering, always looking at, and of course we'll come to pound yen in a moment on the charts, so make sure you stay around so you see that, so then we can start to apply some of these thoughts to do with rate cuts and that kind of thing to the charts, to prices and that sort of thing. That's all to talk about in this article, though. Next article to talk about is more so to do with world tensions, talking about Vladimir Putin and his threats to do with nuclear war. Now, Vladimir Putin has now made a new warning to the West by saying that nuclear strikes would be the Russian response to any direct risks posed by the West. This came in a speech in the Red Square during the celebrations marking the Soviet Union's victory in the Second World War. Now, this is, of course, very significant and, is some very powerful rhetoric, of course, which will certainly be shaking markets, or at least is something we always have to factor in when we're looking at the way world tensions is, of course, affecting markets. As we talk about a lot on this channel, there are wars being waged across the world at the moment, and that's greatly affecting certain assets, especially gold and other safe haven assets, which are ultimately being used by investors to hedge themselves against, the current risks to global war or regional conflicts, as we're seeing in the Middle East, as that's kind of key worry there. But of course, more so to do with Putin and Europe and Russia. Ultimately, we've seen this divide definitely grow over the years between Russia and Europe, with this kind of Russian invasion into Ukraine really kickstarting the hostilities between the kind of blocks of nations, with that being the EU and NATO against Russia. And this is kind of, recreated what we saw with the Cold War back in the 1980s, actually going back to 1950s to 1980s. And now we're kind of looking at this new Cold War era, where Russia is definitely, butting heads with the EU Britain and the US. So kind of that is the situation at the moment. And of course, Russia's invasion into Ukraine is kind of always heating up. Something's always happening, and at the moment Russia kind of is on this offensive where they are making gains, and this has largely been triggered by some breakthroughs in certain areas of the front, where of course the Ukraine at the moment is largely unsupplied without of that key, US aid, which was of course held up in Congress for quite some time. So, things are heating up with regards to these wars, and now we're hearing from Vladimir Putin, who's making these key threats to the West, which we've heard kind of throughout the war, but less so from Putin himself, more so from certain political activists and that kind of thing. So this is very significant rhetoric, and of course anything to do with nuclear war is very much worrying for the markets, because it's worrying for the world, and so that is always something you have to factor in. Now, this speech in the Red Square also enabled Putin to once again praise Russian soldiers fighting in Ukraine, as he once again vowed to stand against the West and their efforts to contain Russia's geopolitical influence. The Victory Day saw a parade of Russian military hardware roll on past the Kremlin, with the equipment boasted including 3 intercontinental ballistic missile launchers. This warning by Putin seems to represent a change in Russia's stance against the West since the start of the Russo-Ukrainian war. The war is now also showing Russia's making gains. The war is now also showing Russia is making gains against outgunned Ukrainian troops, who still await, that kind of recently passed US aid from a $61 billion aid package. So definitely, we're in a very interesting time at the moment, and these threats will likely affect the way certain figures within the West are positioning themselves geopolitically, and of course it will also affect markets, which we'll come to in just a moment. As we are now done with the articles after finishing with this, next things to talk about is of course to do with the charts, where we are beginning, like always, on the US 30, talking about US indices as a whole, but definitely, at the moment we're looking at the Dow Jones, which is in a very interesting spot, because ultimately, whilst yesterday and the day before I was talking about, the Dow Jones not making many moves, kind of consolidating, just waiting around this key liquidity zone that I'd noted out just here, what we actually saw yesterday on the charts was the US 30 swinging to the upside, pushing to the upside, kind of hooking back on itself, and using the liquidity found within this key liquidity area and support level to push higher and rally to the upside. And now, as a result of that, price has now made its way back up to these old high levels, kind of. And if we just kind of zoom out, go on the daily, which I think is important sometimes when we're always on these lower time frames, we can really see how this retracement has now taken place, and now possibly, one could argue that the retracement is now somewhat over. Of course, we haven't broken these previous highs just yet, but ultimately price has reclaimed a great deal of territory, which was lost during this kind of large retracement, and quite quickly has kind of jumped back to the upside. And of course, this sell-off was largely driven by that kind of macroeconomic perspective from the Fed, which of course led many to see interest rates as something that was going to stay high for long, but ultimately prices reclaimed those losses quite fast. And now price is definitely nearing those previous all-time highs, which is very, very significant things. On lower time frames, though, ultimately price has swung to the upside from this key liquidity zone, and we can kind of ignore this Fibonacci retracement tool, as it was not kind of capitalized on by price. So ultimately, where price is now, though, is kind of lining up with this kind of area of liquidity, previous distribution and accumulation. So definitely keep your eyes on the US 30 as prices in some interesting levels at the moment as it does push for those previous all-time highs. Next to talk about though is the dollar. Not much to say on the dollar apart from the fact that it has kind of sold off and now broken through and dropped below this key liquidity zone which price was kind of sitting on. The level really wasn't somewhere that we could say price was going to hold at all the time. It wasn't this super important key level, but ultimately it was a level which price was using to hold above, and now we are seeing price sell off and break below that key liquidity zone and move to this lower range level, this lower area of support. So it is interesting to see price now moving to the downside. And what was interesting is we actually didn't see much economic data come out yesterday, as I hinted to in yesterday's morning market briefing. So it kind of is interesting to see price selling off nonetheless, and this could represent the kind of overall bearish sentiment within the market, which is now emerging. Next to talk about though is Euro USD, which is kind of entering this range period and is really carrying out this kind of ranging movement, with price now moving to the upside and nearly reaching this top level of liquidity and kind of keep resistance level. So it will be interesting to see whether price does sell off from that level, just simply because this is an area which price has interacted with before, both as support, and more recently as resistance. So it will be interesting to see whether price does react to that level. And should price come into contact with that level, we're really looking to see whether price moves above and can hook back on it and then continue higher, or in fact will price hit that level and sell off back down to this key liquidity zone. There's no key fibs to kind of really draw out here. Just keep your eyes on Euro USD, as today we're not receiving too much data apart from the ECB's monetary policy meeting accounts figure and US consumer confidence figure. So maybe those two will weigh up and make and have some effect on the markets. Next talk about though is to do with pound, obviously talking about pound yen, which goes back to the kind of first thing that we spoke about on the chart of the day, which was of course the Bank of England's rhetoric yesterday. And despite what the Bank of England said, we haven't really seen much moves take place, with price really staying where it is for the moment. So maybe it's more useful to look at something like pound USD, where we are seeing pound actually make some gains, which is quite surprising, because one would expect, of course, price to sell off for pound dollar, when we are looking to see the Bank of England cut interest rates before the US with the Fed. So something to think about there with pound dollar. Next talk about is Bitcoin, which has just retraced and bounced off this key 50% Fibonacci retracement level and is now on the upswing, which is very interesting to see, because whilst price did interact with this Fibonacci retracement level, price did not make its way down to this kind of more significant, more key level of 61.80, which lined up with this key liquidity zone around that $60,000 a Bitcoin mark, which is of course a very well-known psychological level within Bitcoin, or on the Bitcoin charts at the moment, as that's kind of acted as that bottom for the kind of highs that Bitcoin has kind of hovered around at the moment. So definitely keep your eyes on Bitcoin, as this upswing could then be that surge once again back to the upside. Next to talk about though is gold, which has now broken above this key liquidity zone just around this level. So definitely keep your eyes on gold. It'll be interesting to see whether price can now hook back on itself, interact with this liquidity zone. The upside move obviously could be influenced by the Victory Day parade for Russia yesterday, with Vladimir Putin's kind of warnings to the West over nuclear war, obviously playing into gold's use as a safe haven asset, with gold, kind of being used as that hedge against world tensions, which could explain why gold is now on the upswing following those statements. Lastly, to talk about though on the charts is oil, where there's not much to say apart from the fact that prices, moved back above this key liquidity zone, where price dipped below and is now once again hovering around this area. But not too much to say on oil for the moment, as we're still waiting for more news from the Middle East. That's all to talk about in the chart. So lastly to talk about, of course, is the economic calendar. We are actually getting quite a bit of data today, which is affecting different markets. Now, firstly, we are getting the Japanese household spending figure. Followed by that, we're receiving the British GDP figure, followed by the British balance of trade figure, and then the British industrial and manufacturing production figure. Followed by that, we're receiving the Italian industrial production figure, as well as the Chinese current account figure. Followed by that, we're receiving the ECB's monetary policy meeting accounts, as well as the Canadian unemployment rate figure and the US consumer confidence figure. And lastly, we are having a few Fed officials speaking today, so make sure you're listening out for that. But we've covered everything there that's important to see on the economic calendar. We've covered lots in the articles though, lots in the charts and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.